from an insurance standpoint, you want to get with someone that does what you do, right? If you're the one teaching the insurance agent what's going on, they're probably not the right fit for you. Right? You want to align yourself with somebody that's going to help take your risk off your plate, advise you properly to get you properly covered.
A quick note before we start. I really enjoyed my conversation with Mike Peplinski, Vice President at Harding Brooks Insurance Agency in June. He shared a lot of valuable information about risk. Some of the commentary is critical of some lender behavior that does not apply to the commercial asset-based lender and lease finance companies ACS is proud to work with, but worth calling attention to because of the importance of proper documentation and rigorous diligence. Thanks for joining us. Welcome back to ACS Portfolio Perspective. I'm your host, Andrew Pace, Chief Client Experience Officer at ACS, joined today by Mike Peplinski, Vice President at Harding Brooks Insurance Agency located in Syracuse, New York. With over 15 years in the insurance industry, Mike brings a unique and valuable perspective to risk management and asset-based lending. His career began in district sales management at HSBC and evolved through key account executive roles at a regional-based insurance agency. Since joining Harding Brooks Insurance Agency in 2014, Mike has served as vice president for more than 11 years. In 2016, under Mike's leadership, Harding Brooks launched an exclusive insurance program tailored specifically for the asset recovery industry in partnership with leading associations. Mike's deep experience in financial services and insurance gives him unparalleled insight into litigation trends, regulatory enforcement actions, and the evolving compliance landscape. His expertise in wrongful repossession claims, contract enforcement, and regulatory accountability makes him an invaluable resource for helping lenders protect themselves while maintaining effective and compliant recovery operations. Mike, welcome to the show.
Thank you. That was quite the intro. Appreciate that.
My pleasure. Thanks for being on. Looking forward to this. So the legal landscape in asset recovery, let's talk about that. To kick things off, what are you seeing in the field right now? There's clearly been an uptick in legal pressure around recovery. What's driving all of it?
So, lawsuits are coming fast and furious. Just talking 2025, the first half of 2025 has already surpassed what all of 2024 brought in terms of number of claims, in terms of number of lawsuits. The reason being is every billboard you see, it's all attorneys, right? What really comes down to is a lot of contract or really litigation funding, which all that is these, hedge funds, finance companies are literally fueling all these attorneys and saying, hey, we'll pay you up front. You go and you go find the business and we'll pay you because we know you're going to win. And that's really where it's coming from. So all these billboards, all these plaintiff attorneys are literally soliciting business. And what was hard to find maybe 5, 7, 8, 9 years ago in terms of where would I even go or what would I even think about, it's when something happens, man, you have 5 attorneys that you just know off the top of your head of, oh, let me call them and they're ready to go. So the landscape right now is very, very challenging, very, very difficult. The frequency is coming very, very fast, and it's a tough thing to manage right now.
Yeah. What is the normal timeline for when you see these lawsuits materialize? Is it a few months after the incident? Could it be up to a year?
So every state's a little bit different depending on their their laws in the state. A couple of years ago, typically wrongful lawsuits would come in, 9, 12, year and a half later, 9, 12 months to a year and a half later. Now you're seeing them much quicker come in because of the ability to have a lot, attorneys at your fingertips. They know where to call. There's someone that are ready to jump. They're getting solicited themselves. So now it's actually, typically under, a few months, 6 months, we're seeing them.
Yeah. And are there forums, message boards? Are there ways where attorneys, customers can look and see which companies settle or are getting sued and which ones settle to become more of a target?
Yeah, and every state's a little different, but there's different avenues that attorneys can pull and see, when certain things were defaulted, whose whose car was picked up for repossession. But every state is a little different, but there's definitely places that people get targeted. We literally had a person 2 weeks ago receive 2 different lawsuits, exact same verbiage, except, name and date of one that actually transpired, but verbatim cookie cutter lawsuit, which just tells you that there's certain people out there that are targeting areas that have an avenue to the information, and they're just literally cold calling, soliciting these people and saying, hey, come with me, I'll get you some money.
Sure. And they're looking for a quick settlement. They're not looking to obviously go to trial in those cases. They just want to try to get a quick.
What really is going on is the attorneys want to drag it out. The consumer is going to get a small little piece of money, but it's all these, they call it fee shifting. Really what they do is just drag it on, and it's a lot of attorney fees that they're counting on.
Gotcha. How is the growing focus on unfair business practices by regulators changing how lenders or recovery agents operate?
It's really challenging right now. It all comes back to contracts of how they can operate, how the repossessor can operate. And a lot of the large lenders, not dropping any names, but the large finance companies or banks are getting larger, right? There's less smaller operators out there. The large teams, finance companies are getting big, and they're kind of strong arming a lot of the vendors of theirs, such as repossessors, into, hey, you need to do as I say, you need to do it the way I tell you to do it, what timing I want to do it, all these kind of things of this is how you're going to do it and this is what we're going to pay you. So it's tough from a repossession standpoint to do things in the right way, because they have all these codes, all these compliance pieces they have to do. But at the same time, they're under their ruling of how much they get paid, how much they're doing. So it's a tough balancing act to find the right repossessor with the right compliance, right training, that's doing it the right way.
Right. And I think you just mentioned we're getting to the one-sided contracts, and they're are being challenged more frequently. How are they factoring into enforcement actions and even the insurance claims, right?
So the big thing on contracts, it's everyone, anytime a lawsuit comes, it's let's see the contract, let's see, where you're at with everything. So it all goes back to the contract. Now, all the contracts are written up by these banks, by these lenders, by the finance companies, and many of them try to do the right thing, but often too many of them still don't. And what I mean by that is they are very one-sided. So the indemnification piece, which is the biggest issue going right now, basically says, hey, if the repossessor does anything wrong and we get dragged in, well, they're covering all the fees, they're handling the lawsuit, they're taking it on the chin, they're doing it, and it's their fault. Fine. On the flip side, if the bank does something wrong, such as an invalid order, meaning they put out an assignment that should never have been put on, maybe their person's out on military leave, whatever the case may be, they made the payment and never got withdrawn, and the lawsuit comes, they're not picking up the tab for the repossessor. The repossessor is still picking up the tab, which is really one-sided. So that's been a big challenge for many people. We've had a lot of success in the repossession world to get that fair, get that equal, but too many times it's still an overwhelming number of lenders that really make it one-sided. Now, when you look at the wrongful repossession lawsuits coming in, this is the last 2 years numbers, about 49 point, I think it was 4%, 6%, so we'll call it 50%, just shy of 50%. Of the lawsuits that come across our desk have nothing to do with the actual repossessor. It's all an invalid assignment, lien loss, stuff that the decision making or the really making sure the assignment's valid is done on the bank side. And the problem is 1 out of every 2 that we're seeing come across our desk have nothing to do with the repossessor. However, the repossession company, the repossessor, is being held accountable. So you gotta, the wrong balancing act of the person making the decision, right, is not held accountable. So the responsible party is not being held responsible. Now, I would like to tell you, we've in the last 3-4 years, we've made a lot of strides. A lot of people have stepped up and changed their contracts to make them fair, make them equal. But still, over 50% of the contracts floating around out there are one-sided.
Mike, that really enforces the importance of proper documentation. And, I'm happy to say that the vast majority of the contracts we're seeing from our clients are not one-sided. Now, before a repo even happens, what would you suggest lenders should be doing from a documentation or accountability standpoint to protect themselves?
Well, from a lender standpoint, they should have a team to go and vet the assignment, right? Make sure that it is true they are behind. No payment plans have been put in play. There's no military leave act going on. Everything is status quo versus grading it and kicking it out quickly. That's the key.
Yeah, I can tell you from our experience, we're seeing more and more clients putting the onus of that responsibility on the vendor, whereas we have to do scrubs for bankrupt, SCRA, deceased. So they're starting to push some of those things on the vendor, and there are resources out there where you can hire companies that can do those scrubs for you, but it comes at a cost. But no, you're right. I mean, it really just comes down to capacity, right? Do you have the resources, and do you have the capacity to do those things? And there seems like they're shifting some of that onto the service providers to do those things.
Yeah, and again, it's just the responsible parties not being held accountable, and therefore nothing will really change. Because quite honestly, from the attorneys, the plaintiff attorneys that are seeking and coming after you and soliciting these debtors, that defaulted, that to go sue, that's going to be there, and that's it is what it is right now. But if we can have the right responsible party take ownership and make the payments, whether it's a repossessor, did something wrong, they take ownership. The bank lender did something wrong, they take ownership. It'd make it a lot better.
Right. So let's talk about bank consolidation, negotiating power, switching gears. We've all seen how bank consolidations, it's reshaping the industry. Things that, you've mentioned it earlier, the big are getting bigger, and that's shifting the dynamic for everybody involved. How is consideration affecting the balance of power between lenders and their recovery partners?
So the consolidation, the balance of power is very, it's tough on the repossessor because there are so few banks, finance companies out there that are holding the majority of the repossessions. So if you want to have a living, right? These are all small business owners. If they want to be able to supply a good living for their employees, for themselves, they need the work. If you want to get the work, there's only a certain amount of players out there that hold 80% of the assignments. You got to work for them, and if you can't, well, it's going to be hard to make a living, hard to support all these employees. And I've had some conversations with a lot of political parties in terms of the small business department up in Washington, D.C. back in May about, this consolidation in the finance world, as well as other industries. They're trying to offload all their liability on their vendors that are forced to take it if they want a living. And it's really not about, clearly the small business department's not happy about hearing that all these large corporations are offloading all their liability to the vendors when there's really no decision power, nothing at stake for them. So it's a very big challenge that they have to accept to a degree, and they're trying to partner with them. But in many instances, they're just not. In the repossession world, a big piece right now that's kind of getting pushed back is, hey, for one, they haven't gotten a pay raise, right, in a decade, we'll call it. Which it is what it is on one side, but I always look at it as like a theater, right? The tickets to the theater, to the movie, keep the lights on, pay the bills. There's no profit. All the candy, all the soda, all the popcorn, that's where people make money. So it's all the different ancillary benefit or pieces that bring up their ability to do it. That's what they've taken away from a finance company. So flatbed fees to farther distance to storage to all those ancillary pieces of their job to personal property, clearing out cars, all that kind of stuff has been kind of removed. And that's really how they make their money. And that's a problem.
Yeah, I was just going to mention or ask you what are some of the things they can do to stay competitive. And in the past, they could make up for it with personal property inventory fees, storage, cutting keys, and this is mostly for the auto industry, not necessarily on the commercial side of things, where you don't deal with a lot of personal property, with the exception of semi trucks and things like that. But that's where they used to be able to make up. They'd offset what they didn't make on the repo. They would almost break even on what they were getting paid to do the repo, right. But they were able to keep the lights on by and then things shifted after the recession. Their banks became more regulated. You had obviously, risk. You had the procurement. You had risk, compliance, and they've pretty much just put it all out to the industry and say, hey, this is what we're paying. Here's what we can. You are allowed to charge for personal property inventory fee. Here's what you're allowed to charge for storage. Kind of telling the business owners what they can charge, right?
Right. And a lot of it also came from the CFPB, the Consumer Financial Protection Bureau. Now, with the new regime running the country, they basically took the CFPB and kind of basically kicked them out. It's a shell of itself, and they kind of put a lot of consumer protection in there, which is all good, but also a lot of the lenders said, all right, no, you can't charge this because it's going back to the consumer. You can't charge this, which basically made them work for free in a lot of instances. But with that really kind of being thrown out the door right now, or putting on pause that whole, piece of, consumer law, things will and should be able to open up a little bit for them to get paid on the services they provide.
Right. More
that's
more
an
fair,
optimistic
balanced
view on it.
Right. So there's hope. There's certainly some hope there. Are you seeing NDAs in contract language being used more strategically or aggressively, or in this new environment?
So what's funny is a lot of people will come to me and come to my team and say, hey, can you review this from the insurance standpoint? We're not attorneys. We're not trying to be attorneys, but we can tell you on an insurance standpoint how an insurance will respond based on their insurance requirements and insurance language in there. And a lot of large banks, lenders, finance companies actually put in there, you are not allowed to seek counsel. So the NDAs is a very hot topic also, because they're trying to say, oh, no, well, that's not what we mean. But yeah, that's what it says in their contract. They're not allowed to seek counsel. We've had some people literally that I know not get business or lose the business because they pushed back after seeking counsel and said, hey, these are some red flags that were told to me. And they're like, you're not allowed to do that. And they literally took the business from them and said, we're going elsewhere. So it's a very, it's literally, David versus Goliath. They know they're bigger. They know they can flex their muscles. And you know what? If you don't want to do it, fine. We'll get the guy down the road to do it.
And that's, and I guess that's the other issues. Then now you have somebody that's not properly sustain their business model at, doing it at the rates. How can they sustain that?
So there's a lot of pushback on these banks lenders. They have their requirements that they want to hold to everybody. But when they get pushback and in certain areas, they're like, you know what, we'll let this slide or let that slide or let this slide from requirements. And they end up getting people to do the repossessions that aren't qualified. They don't have the right coverages. They don't have the right training, and they're just not part and not educated. And that also brings more lawsuits, more consumer problems, right, to the consumer world. It's really, they have separate contracts for different people across the board, and it's not flatlined.
So let's talk about something that doesn't always get the attention it deserves: claim denials. What typically leads to claim denials, and how does contract language or account segmentation issues play into that?
Yeah, that's a great question. And this is where we spend a lot of time educating the lenders, finance companies, forwarders. They're the ones really scripting these contracts, and a couple words here, a couple words there change everything when a claim comes in. And really, from their perspective, is they want the repossession company's policy to extend and pick up their tab, really, when a lawsuit comes in that they weren't responsible for. So the repossession company did something wrong, we're responsible for all of it. Hey, it's their responsibility to pick up the tab. But if the contract's not written properly, it cannot extend, right? Because again, anytime there's a lawsuit, it all goes back to the contract. So the biggest thing that consists of denials for the extension of coverage for the lenders, for the forwarders, is the additional insured request. There's a lot of policies out there, or contracts, I should say, that don't have the proper request to be named additional insured. Specifically, a lot of them in the forwarding operators, some of the banks. But if they don't, from a forward perspective, if they're not saying, hey, we need to be named additional insured and our clients, well, the buck stops at the forwarder, does not extend out to the clients. And 9 out of 10 times, the people that are named in the lawsuit are the repossession company because they're aware of them, and then the lender bank because they know who had the loan on it. So that's a very big piece, is additional insured requests. A lot of them don't put it in there at all. And the other piece is when they do write it in, they'll put it in the indemnification piece. So the indemnification portion is a contract. It's part of the contract that's with the two parties signing the contract. It has nothing to do with the insurance policy. So the easiest way to say it is indemnification is not an insurance obligation. Okay. So they need to take that additional insured request and have it in the insurance portion of the contract. That is probably the number one reason why a lot of lenders, banks get very frustrated, saying, I told them to, cover this. They said they have it. It says on the certificate of insurance that it's covered. And yes, it does. But on the insurance certificate, if anyone ever reads one, right, it is also saying this is not a contract, right? This is a snapshot of coverage. So yes, it's there if it's part of the contract. If it's not part of the contract, this part is irrelevant.
Right.
So that's a very hot topic. And a lot of people don't grasp it or don't understand it. And you wouldn't if you're not in the game, right, and doing it. That's why it's important to get the right people to review the policies, review the coverages. And we stress on even all the repossessors that we look at, say, hey, go educate your clients to make sure you're a good partner to them. Because if you do something wrong, you want coverage for them. You want to be able to take care of it.
Right. And, looking at the assets they're picking up, are they insured? Do they have enough coverage to cover the loss of that asset, right? And if they don't, are they going to self-insure the loss, the overage, right? So if they have $100,000 asset, but they're only covered for $50,000 of cargo or on hook, is that agent or company, that national agency, are they going to self-fund that if they have, if they care about the relationship that they have with their client, right?
Yeah.
I mean, how about you come across that?
And most people don't have the funds or the means to take on these claims themselves, right? It's why they buy insurance, because it's transferring their liability to someone else. It's depending on the claim lawsuit, can be very, very hefty.
So to close things out, Mike, let's talk about litigation, how lenders can better protect themselves in an increasingly risky environment. Why do you think lenders are becoming more frequent targets for legal action?
Well, simple answer, all these plaintiff attorneys are going after where there's money, right? They're going after deep pockets, and where deep pockets are lies insurance policies. These plaintiff attorneys that are coming after all these consumers in turn to go after the lenders, the banks, and ultimately the insurance policies there. They know there's money. They know there's big money. And they know it's very challenging to defend it, right? It is what it is. If we don't have hard evidence, nobody is going to side with the single mom that just lost her car, that's trying to make ends meet to make, a living for their kids. No one's going to side against them. So the only way to get out of it is if there's hard, concrete evidence. And that means, it's just getting more and more popular. Body cams are becoming very popular. Cameras on all the trucks to be able to videotape everything. Without that, you lose. It's that simple. The he said, she said doesn't mean it's a split decision. It's he said, she said means you lose 100% of the time. And it's that simple. If you do not have proper evidence, and that's hard footage, body cams, hard footage, dash cams on your vehicles, you will lose, and you will lose a lot of money. The insurance carriers will lose a lot of money. The insurance premiums go sky high, as anybody knows right now, especially in commercial auto, and the repossession world. It's just going up and up and up. Why? Because not a lot of people have invested yet in all these cameras, in all these body cams, and then these plaintiff attorneys are coming at them, and it's like, all right, where do we stroke the check? And then that's the other misconception out there. Everyone's like, oh, these insurance companies, they just give anybody anything they want. And the reality of it is, if they don't have evidence to support a case to win, they want to stroke the check as fast as they can and close out the claim, because the faster they do, the claim stays small, right? And it's not about settling fast. It's settling fast because they have no way to fight.
Right.
If there's hard evidence, then they can look at, hey, let's challenge this. Let's deny this. But the other piece that's kind of coming now, and because more and more are getting these dash cams, are getting these body cams, now these attorneys are getting smart. It's not about, really, they don't even care about the facts of the case, which seems odd to say. They're like, what venue can we try you in? And then they come at you for training, hiring practices, training, and holding people accountable. You could hire them well, you can train them, but if you're not holding them accountable to, adhere to your policies, they'll say, hey, that's on you. And maybe my person was 100% at fault for whatever they did, but you know what? 30% on you, and it wouldn't have been as severe if you did what you were supposed to do. So they have all their little tricks, their little loopholes that they try to come in and do, and get you hit.
Do you find agents that use technology like dash cams, body cams, do you find that a lot of customers will act differently, and having that technology will almost deter customers or from things being escalated or having a breach of the peace? Your experience with talking with boots on the ground, you found that that's prevented a lot of
as soon as people
testy
see
situations,
that camera, majority, not everyone, right, but majority instantly change. Their demeanor changes, their tone changes, everybody changes. Now, don't get me wrong, there's that small percentage that doesn't really matter, but yes, the more they see that and they point out everything's being recorded, everything changes instantly. So it's really, really important that more and more get it, but it is a cost to do. It's an expensive piece to fully outfit your entire team.
Sure. Is there any benefits with rates for companies that implement and use, camera, video technology on all their recoveries? Does that?
Yeah, so that's a good point. So from the cameras, right now, it's one of those that, no, there's not a direct, you get 10% off, but indirectly, yes, if you use it and you adhere to it and you train and use for training, ultimately your claim should come down. I always kind of say it's just because, you send someone to a defensive driving class doesn't mean they're going to be a defensive driver. They have to put it in play, put it into action, right?
Right.
The telematics is the biggest piece that you can sometimes get some discounts for, and that's just really dictates driver behaviors, and really your employees' behaviors of how things are going. And that's really a proactive tool to help coach them before something bad happens. And that's the biggest tool to use, but also the biggest tool that's not used. We did a hard push in our insurance program that we wanted that for everybody. And over 90% of the people out there, the operators out there, had a telematics system in all their vehicles. However, less than 10% were actually doing anything with it. Weren't even looking at it. It's just kind of checking a box and there it is.
Right.
And that's almost worse because you have all the evidence that this person, is now on their phone while they're operating a vehicle or whatever the case may be, and you didn't call them out on it, so they continue. So it's one of those, technology can be your greatest friend and your greatest enemy if you're not used properly.
No, that's a great point. From your perspective, how do insurers evaluate preventable claims, and does it affect how they price or renew their coverage?
So the preventable claims is simple. It's making safety culture important, right? I get invited to a lot of safety meetings to help assist, help partner to run throughout companies. And I was at one operation and the whole thing was this big safety push, supposedly. And the first 45 minutes of their safety meeting was doing awards on nothing to do with safety, right? It's all production, nothing to do about how safe or how clean their production was, right? And then the safety meeting was like smaller than that. And once people realize they need to put emphasis on safety and make it at everyone's forefront of their mind, that's never really going to be a true culture. I always say a clean loss history is not by chance, it's not by luck. It's about doing the day in grind of making sure everybody's on the same page. That's culture that the management built in, and it's not unlucky when their loss history is terrible, right? If you see this frequency all the time, listen, you just don't have a good safety culture going on. You don't hold people accountable. You're not doing the right steps to create what is necessary. So from preventable, there's no silver bullet. Hey, you do X and you're good. It's constant awareness, making sure your drivers are very aware, your employees are very aware of all the situations, how to, they do a lot of training now on situational awareness to avoid situations, to be aware, pull out. We always use this phrase from a driving perspective. Just because you're not at fault doesn't mean it couldn't have been avoided, right? If you're driving defensively, you're going to avoid all these things that you probably weren't even at fault to begin with, but it still happened because you were paying attention. And that's a lot of it. It's just a lot of awareness, a lot of emphasis on the management pushing down on all their employees, on their staff to do the right thing and just make it a big emphasis, and it'll turn.
Yeah, I love that. Making safety part of your culture, and policies and procedures only work if they're followed, right? So, it's that constant reinforcement of what are your best practices, right?
Yep.
So, what are a few major don'ts when it comes to recovery actions? The kind of things that almost always land somebody in hot water, or we can say in court.
So one thing that's been out there that it always is just a training tool is police are involved for one reason. Police are involved to get any repossession company person out of a bad situation. Police are never involved in helping assist with the repossession. As soon as a police officer has to come, it was a breach of peace, right? There's no more peaceful repossession going on. Okay. Are you legally allowed to take it? We have most police officers say, no, take this and go. You're allowed to, I see everything, you're good, go. So yes, you're legally allowed to do it, but it's also a breach of peace, and you will get sued 9 out of 10 times. So a big, misunderstanding and trying to make sure everyone understands, police are called for one thing, to get yourself out of a bad situation.
Safely,
right? you never call to assist. That's it. If you're calling them to assist, you're going to get sued. You call them to get you out of a bad situation safely, and that's it. And then you're done. Move on. And that's a lot of we see a lot of lawsuits coming like that, where police will come, because it's got a hostile environment, right? And then they're like, no, take the whatever you're repossessing, and so they do. And days to follow, there's a lawsuit, and then I hear, well, police said I could take it. Yes, you can, but clearly that wasn't a peaceful repossession, right? And you lose. So a lot, again, it goes back to kind of a training and some misconceptions out there.
Have you ever seen police or law enforcement agencies get named in lawsuits in situations like that?
Have not, to be honest with you. They name the company and they name the lender.
Yeah,
I have not seen the police. I'm probably pretty sure no attorney wants to go after a lawful, the right. Police officer or law force. That's where they want to make buddies with, and go get the bad repossessor and the lender for being bullies of taking a
right.
vehicle or equipment that they didn't pay for.
Right. One of the comments they had is the importance of case management, like with the consolidation of repossession companies over the since the pandemic, right? And obviously the cost to get insurance, right, in a high risk environment, and you have, because of the limited number of repossessors that are out there that are properly insured, vetted, obviously they're getting a lot of work, so there becomes a case management problem, right? So what advice do you have for companies when it comes to the importance of proper case management? Does that make any?
Yep. So, before the pandemic, it was very heavily, listen, you got to take what you get, right? Your workload is X, and you have to take it no matter how good or bad paper it is. The pendulum has slowly swung in the last 2-3 years. The volume is over-exceeding really the workforce in terms of repossession world, where I've become very close with a lot of lenders, a lot of large banks, because I work with them very closely on a lot of from claims to writing their contracts up, from insurance requirements, standardizing stuff. And they said there's so much work out there that they actually have to push out the repossession more. So what used to be about a 55, maybe 65 day past due, they'll kick out the assignment to get repossessed. Then they went to like 75, 85. They're over 100 days now. Two of the largest lenders out there are right around 105 days past due before they even send an assignment out to the field. But saying that, the volume is so high right now that from the repossessor, they can be pick and choose. You know what? Hey, if you don't want to give me what I'm asking for, or you don't want to be fair in contract terms or pay me a fair wage, that's fine. I'll get to your assignments when I get to them. I'm going to focus over there. So the last, I'd say 1 to 2 years, the volume of people picking up hasn't really changed, but they're becoming more profitable solely because they're working on better paper, right? They're getting better assignments. They're getting closer to the better clients of theirs, right? And that's helped the repossession world a lot. And again, like I said, these lenders are pushing things out, making themselves look better in the sense of, hey, we're not going to send you out to a debt collection agency until, almost double what they used to, just because it's almost too much for the workflow to even happen.
So the lenders that are more proactive, they're not taking longer to make a decision to whether or not to sign it out or not. They're actually getting, preferred treatment on those accounts. Lenders who perhaps maybe pay those agents quicker will obviously get preferential treatment as well. That's obviously something that I think a lot of companies will, hey, who's paying me fairly and who's paying me the quickest and who has the best work, right? And those are the accounts they gravitate towards. And when they have time, they can kind of backfill and work some of those other some of those other accounts that may not be as easy. They don't have GPS. They don't have good intel. So they'll obviously get to those when they can, but they're not going to invest a lot of time, because the longer the lender waits to assign it out, the harder the effort becomes, right?
Storage lots is another big area. Storage is tough to get and very expensive. So, these repossession companies only have X amount of, space to put their collateral that they repossess, and they're not going to fill it up with, bad assignments aren't paying as well, and then they're stuck because they're not getting off them quicker. So they're filling them up with people that get them off the lot faster, that are paying them better, paying them on time, as you said, and all those variables. So really, in the last couple of years, the pendulum has swung where the repossessor has more power than they ever have. Don't get me wrong when I say that, because the big banks and lenders still flex their muscles when they have to. But they have more power. They're winning better, winning more, struggles with them that are going their way.
So let's talk about unlicensed repossession activity. So there seems to be a lot of that going on. There are a dozen or so states that you're required, if you're doing a voluntary, involuntary repossession, where you should be using a licensed repossession if you're doing the right thing. What are your thoughts on that? How do you educate, or what can you do to educate to make sure that some of the people that you're working with are properly insured, properly licensed in those states that require it, so that everybody involved in that transaction isn't potentially exposed to a wrongful repossession lawsuit?
Yeah, so I'm a big supporter. I'm a big fan of licensing in states, and I know that's not everybody's opinion. But here's the reason why I'm a big fan of it. So those that are licensed, yes, it does cost money to go do the training, get vetted properly, get licensed, which are the reasons why people push back on. However, if you're doing all that, you're investing in that, you're going to get properly trained people, and then the lenders, afforders, etc., have to go through you to get the work. So you're going to weed out all these untrained, doesn't have the right insurance, that are just kind of fly-by-night companies. They're out of the game. So you'll control more of the work, right, better than you do now, even though you have to do a little investing. Long-term, it's going to be better. And long-term will be better for the consumer, for the bank, for everybody, because you're getting trained professionals versus, hey, I just hired this guy off the streets and I threw him in the truck and said, go pick up a car tonight. They're not trained. They don't know, what to be looking for, how to handle situations, how to handle hostile debtor situations, how to handle all that kind of stuff, what to do. And that's when you see your frequency start bumping up. So I know why some people are like that, but I'm a big fan of it. I wish it was across the board, solely because you're going to weed out the people that are not trained, not compliant, don't have the proper insurance coverages, and less issues will happen from it.
Agreed. What about the companies that are participating that don't have the proper insurance? They're picking up assets where they don't have wrongful repo insurance, and then they're subcontracting out that job to a company that may not have wrongful repo insurance themselves, and they go pick up the wrong asset, or they were told it was involuntary, but they show up and the customer changed their mind and they're like, what are you doing here? You can't have this truck. And now, like you mentioned earlier, you have somebody that's not trained on how to handle, situations like that. And oftentimes you find yourself in a breach of the peace situation. Now there's a confrontation, right? So what are some things that, you can share with our listeners about making sure that if they are going to be doing things like that, that they have the right insurance, so they're protecting everybody involved in that transaction?
So a couple things on that answer. One, from an insurance standpoint, you want to get with someone that does what you do, right? There's a lot of people out there like, oh yeah, I got the right insurance, and they're their only, you're their only client that does what you do. Like they don't specialize in what you do. This is a very unique industry. There's so many things that you need to know. If you're the one teaching the insurance agent what's going on, they're probably not the right fit for you. right? You want to align yourself with somebody that's going to help take your risk off your plate, advise you properly to get you properly covered, for one. But two, right, this kind of goes to the lender side of things. They really should be going through these associations. They really should be going through, these national or state associations to get the cream of the crop, the ones that are, vetted properly, trained properly to do their, collateral. And you're going to have less risks. I work very closely with a lot of the state associations, national associations, specifically the American Recovery Association. And they have all the training that they have to kind of get green lighted for, right? They have to be vetted properly. And you can go as a lender forward, you can go see who has done the training, who has not done the training. And, it's one of those things that said, hey, I did everything I could to get a proper repossession company, a trained, skilled repossessor out there to perform this, challenging task, really dangerous task at some instances. So from both sides, lender can do better on, hey, where do we find them, right? And then the other guys, make sure you're properly insured with an agent that does what you do. That's really for any industry, right?
Sure. I mean, you need electrical wiring done in your house, you should hire a certified electrician. Right. If you're going to need plumbing work done in your house, you should hire somebody that's certified, that's a certified plumber. I mean, you're really taking a big risk by hiring somebody that's not properly licensed. And if they're not properly licensed, they're probably not properly insured. Right.
Right.
So if they're bending the rules, or if they're, circumventing something over here, there's going to be something missing over here.
I tell everybody that, when you're looking for a proper insurance agent, you ask them, what do you, how many clients do you have like me, or how many clients you have in the repossession world? How much of your, how much are you involved in the space? Are you sponsoring things? Are you putting your money where your book is, right? Are you attending these conferences and helping this industry progress in the positive way? And you'll find very quickly who knows what they're talking about and who doesn't.
Yeah. So I think we covered everything today. Is there anything that we didn't talk about during our time or do you have any questions for me?
No, there's the insurance piece itself that's very challenging. We don't need to go down how challenging insurance is right now. I think everyone knows that, but I think it was pretty good.
Great.
Hopefully I covered what you wanted me to cover.
Yeah. No, this is a great discussion. I think it's extremely relevant. I just came back from a credit and collection conference, and there's a lot of new people, entering the space, because obviously there's a high demand for repos, especially in the commercial side of things. So you see new people enter the space. So again, competition's great. You just want to make sure that they're educated. They know they're not exposing their clients. They're talking to the right people. They're properly insured. Things like that. So the timing for this call couldn't have been any better, Mike. Thanks again for being here today. Your experience in wrongful repossession claims, contract enforcement, and regulatory accountability made for a really insightful discussion. You've given our listeners a lot to think about when it comes to protecting themselves while still running effective recovery operations. To our audience, thanks for tuning it. Excuse me. Start over again. To our audience, thanks for tuning in to ACS Portfolio Perspective. If you find today's episode helpful, be sure to subscribe, leave a review, and share it with your network. We'll be back soon with more conversations from across the asset-based lending and recovery world. Until next time.